There is a tax deadline hitting next month that can cost your business thousands of dollars, even if you didn't owe the IRS a single dollar in taxes. Not a percentage of what you owed, thousands on a return where your tax bill was zero. If you run an S Corp, a partnership, or multi-member LLC, and you filed an extension back in March, this is about you. And I promise you, most of what's out there on this topic will not tell you the part that actually matters. I'll let you finish this video, but there is something important I would like to share with you first. If you are paying more in taxes than you should, this is for you. I'm inviting you to join my Tax-Free Wealth Awakening Summit and learn practical strategies to legally reduce your taxes and keep more of what you earn. Reserve your spot now by using the link below. See you at the summit. By the end of this video, you are going to know exactly what this deadline does, why it's built to hit harder than almost any other one in the tax code, who it puts at risk besides you, and the two things that could actually get you out of it if you are already behind. Stay with me because the part most people miss is the one that costs you the most. Here's the part most people skip. If you have an S Corp, partnership, or multi-member LLC, your original filing deadline was back in mid-March. If you filed an extension by that date, you were given 6 more months. Here's why this date is different from other deadlines you might know about. There is no second extension after this. They treat it like any other filing date. File late, pay a penalty, move on. That's not quite how it works for these businesses, and the difference matters. An S corporation or partnership return isn't really about paying taxes. In most cases, the business itself does not owe any tax at all. If there is a profit, it passes through to the owners who report it on their own personal returns. So the return you are filing on September 15th is mainly a report telling the IRS how much each owner made or lose. Because of that, the penalty for filing it late isn't based on how much tax was owed. It's based on how many owners the business has and how many months late the filing is. Right now, at the time that I'm recording this video, the penalty is $255 per owner for every month, or even part of a month the return is late. Sit with that math for a second. A business with 3 partners that files 4 months late, even if the business has a loss, is looking at 255 times 3 owners times 4 months. That is $3,060 on a return where nobody owed a dollar in tax. Owing nothing does not protect you. The penalty exists whether or not there is tax on the line, because this return's real job is reporting information, not collecting a payment. Even if your business has no activity at a given year, you still have to file. Here's the piece that almost never gets covered, and it's the one I want you to actually remember. Along with the business return, each partner or shareholder is supposed to get a document showing their share of the business's income or loss. It's called a K-1. It's due on the same date as the return. Your partners or shareholders need that document to finish their own personal tax returns. So if your business return is late, their document is late too. And that means a late filing on your end doesn't just cost your business money. It can leave every partner or shareholder unable to finish their own personal taxes on time, forcing them to scramble or file for more time themselves. That's the version of this deadline nobody puts in a title. It's not just don't get fined, it's don't be the reason your partners are scrambling in October. I am not going to leave you with just the bad news. There are 2 legit ways this penalty can be reduced or wiped out entirely, and they are worth knowing before you assume you are stuck. The first one is if you are a partner with 10 or fewer partners and every partner is an individual person who split the profit evenly with everyone else, there is an exception that can excuse the penalty completely, as long as every partner already reported their share of the income on their own personal return on time. This one does not apply to S corporation, only to partnerships. The second one, if your business has a clean track record, no real penalties in the past 3 years, you may qualify to have this one forgiven as a first-time exception. The IRS has recently started applying that kind of relief more automatically for businesses that qualify. But automatic does not mean guaranteed, and it's not something you should count on without checking with your tax advisor. Neither of these is a reason to be casual about the deadline. Think of them as a safety net, not a plan. If September 15 is coming up fast, here's what actually matters this week. Confirm which kind of return your business needs to file. Get your financial information to whoever is preparing your return now, not the week of the deadline. And if you already know you are going to miss it, call your tax professional today. The businesses that get hit hardest by this penalty aren't the ones with complicated returns. They are the ones who assumed no tax owed meant no urgency. So one more time, September 15 is the final filing deadline for S Corp, partnership, and multi-member LLC returns that were extended back in March. There is no further extension after this. The penalty is based on how many owners your business has and how many months late you are. Whether or not you owed any taxes, your partner or shareholders' personal tax documents are due the same day. So a late filing affects them too. And relief exists, but only if you qualify and only if you act early enough to show why. My name is Noura Al-Masri, tax advisor. I help entrepreneurs stop overpaying in taxes. If this kind of breakdown is useful to you, subscribe now. I cover the deadline, tax strategies, and the details other channels skip. If your return still hasn't been filed and September 15th is closing in, my team can get you filed before the deadline hits. See you next Monday.